You think you know everything about trading? Well, get ready to have your beliefs challenged. In this video, I'm going to reveal 48 brutal trading truths that will make you question everything you've learned. But more importantly, these hard facts will make you a better trader. Over my 20 years professional trading career, I've seen it all. The wins, the losses, the scams, and the real strategies that actually work. And now I am here to share that knowledge with you. From the myths sold by social media influencers to the hidden realities behind trading educators, nothing is off the table. These are truths that the trading world doesn't want you to hear, but they're exactly what you need to know if you want to succeed. Stay with me, because by the end of this video, you'll not only have a clearer understanding of what it really takes to succeed in trading, but you'll also see through the illusions and the lies that have been holding you back. Whether you're just starting out or you've been trading for years, these 48 brutal truths will force you to rethink your approach and help you build a foundation for long-term success. ICT and similar methods promise a holy grail, but they are designed to hook desperate traders. These methods thrive on belief that there's a secret formula to success. But in reality, no single system works for everyone or forever. The real edge comes from adaptability, discipline, and risk management. Stop looking for magic solutions and start building your skills. There's no shortcut to real success. Most trading educators are marketers first and educators second, if at all. They repurpose generic content that's often free elsewhere, charging premium prices without offering any real proof of their own success. Their income comes from selling courses, not from trading. So be skeptical of anyone selling trading education without a track record. Learning happens in the market, not from overpriced seminars. The so-called traders flexing luxury on Instagram, they aren't real traders. They are influencers, and they are paid by brokers or affiliate programs. Most of what you see on social media is staged to sell the dream of trading, but the reality is far from glamorous. These influencers often don't make their money from trading. They make it from sponsorships. So don't fall for the lifestyle illusion. Real trading success is measured by consistent profits, not rented cars. Most old school trading legends are out of touch with modern markets. They built their success in a different era, where market conditions were slower and less driven by technology. Today's fast-paced, algorithm-driven markets require a completely different approach. Respect the legends. Learn from the legends, but understand that their methods may not apply to today's trading world. The trading industry is designed to make retail traders lose. From broker fees to educational traps, the entire system profits when you fail. And most brokers benefit when you overtrade and burn through your account. So be aware of how the system works. Trade with caution. Don't fall into the traps set for retail traders. AI will take over trading in ways retail traders cannot even begin to comprehend. AI can process millions of trades in microseconds, leaving retail traders far behind. If you think your human intuition can compete, you're already outmatched, my friend. Don't rely on outdated strategies. Embrace technology and look for ways to adapt to the AI-driven future. Lifestyle marketing and trading is a scam. Marketers sell dreams of instant wealth, but real trading success is built over years of hard work and discipline. The flashy lifestyle is an illusion designed to hook you. Focus on long-term gains and sustainable strategies. Real wealth comes from consistency, not showmanship. Only hedge funds and institutions will dominate the future of trading. Retail traders who don't adapt to institutional strategies will be left behind. AI and algorithmic trading are widening the gap between retail and institutional players. Align your strategies with institutional principles to survive in the coming market landscape. The problem isn't your broker. It's your lack of personal responsibility. Too many traders blame their losses on brokers. But the truth is, most failures come from poor strategy and poor emotional decision-making. Face it, Brokers aren't stopping you from managing risk, are they? Take ownership of your trades. Your success or failure is in your hands, not your brokers. Broker manipulation is worse than you think. From slippage to delayed executions, brokers use various tactics to profit off your trades. They win when you lose. Understand how brokers operate. Don't blindly trust them. Learn to navigate their tactics to protect your capital. Most trading mentors don't actually trade. They sell dreams. They spend more time marketing than trading. If they were truly profitable traders, they wouldn't need to sell courses to make money. Before following any mentor, demand proof of their trading success, not just marketing claims. Forex is dying as a retail market. Look, the liquidity is shrinking and volatility is increasingly manipulated by large players. Retail traders chasing after scraps in Forex are wasting their time. Look beyond Forex for better opportunities in markets like options, commodities, futures, even crypto. Technical analysis is little more than glorified guesswork. Indicators and patterns are just ways to rationalize taking risks. The market is too complex for any single pattern to consistently predict price movements. It doesn't work like that. So use technical analysis as a tool, not a crutch. Don't rely solely on patterns. Learn to read the market's context instead. Financial news is designed to manipulate market sentiment, not to inform you. Look, by the time you hear the news, the smart money has already acted. News is used to create emotional reactions in retail traders, not to guide them. So don't base your trades on news. Focus on long-term strategies that are not swayed by short-term sentiment. Backtesting gives you a false sense of security. I hate to break it to you, because it relies on past data that doesn't account for evolving market dynamics. And just because a strategy worked in the past doesn't mean it will work in the future. So use backtesting as a reference, not as a proof of success. Adapt your strategy to current market conditions. Risk management advice is designed to limit your upside. Yeah, that's true. Traditional risk management strategies are overly conservative and prevent traders from taking calculated high-reward risks. Hedge fund managers don't follow these rules. Don't let risk management become an excuse to avoid taking smart risks. Learn to balance risk and reward effectively. AI is smarter than you. Retail traders are already obsolete. AI algorithms analyze and execute trades in microseconds, processing far more data than any human can handle. Retail traders are fighting a losing battle. Understand your limitations and learn to work with technology instead of against it. You will lose. Fundamentals don't matter. Big money manipulates price regardless. While retail traders focus on earnings reports, economic data, institutions use liquidity and market mechanics to move prices in their favor. Don't get caught up in fundamentals alone. Pay attention to how the market is actually moving and who is controlling it. Trading psychology is exploited to sell you more courses. It's like self-development. Traders are told that mastering their emotions is key. But the truth is, most courses exploit psychological struggles to keep you hooked on buying solutions, like a junkie. Your emotions matter, but they're not the only factor. Focus on the mechanics of trading, not just your mindset. Indicators are a crutch for weak-minded traders. Relying on indicators means you're not truly reading the market. Indicators lag behind price action, so by the time you act, it's often too late already. Learn to understand raw price action instead of relying on lagging indicators. Prop trading firms profit more from fees than from successful traders. Most traders fail the challenges, and the firms make money from the entry fees and the losses. They don't care if you succeed. They care that you keep trying and keep paying for trying. Don't be lured into prop firm traps without understanding the odds. If you cannot trade profitably on your own, you won't make it in a prop firm neither. Trading communities breed groupthink. Most traders and communities follow the same signals, the same strategies, leading to herd-like behavior. So again, they stop thinking for themselves. This kind of groupthink stifles independent thinking and creates mass losses. Trading is a solo game. Learn to think independently and develop your own strategies. Your broker is front-running your trades. Brokers often execute their own trades before processing yours, ensuring they profit regardless of your success. They know your position before the market does. So be cautious of brokers and understand the market manipulations they engage in. Day trading is for adrenaline junkies, not for real wealth builders. Constantly being glued to the charts leads to burnout and overtrading. Real wealth comes from smart positioning, not from day-to-day grinding. Focus on the bigger picture. Don't trade for the thrill. Trade for the long-term gains. If you are chasing trends, you've already lost. By the time you recognize a trend, institutional traders are already exiting their positions. Retail traders are left holding the bag, catching the end of the move. Stop chasing trends. Look for opportunities to lead, not follow the herd. The traders with 10 screens, they're not better. They're just more distracted. Having multiple monitors doesn't improve your trading ability. More screens, in fact, often mean more distractions and overanalysis. The real skills is in simplifying and focusing on key information. You don't need a high-tech setup to trade successfully. All you need is a clear plan and a discipline to stick to it. Stop losses are for amateurs. Real traders manage their risk manually. While retail traders rely on automatic stop losses, professional traders understand how to adjust their positions dynamically without relying on mechanical systems that can be triggered by market noise. Learn to manage risk proactively instead of handing control over to rigid stop-loss systems. Most fund managers, they're not better traders. They're just better salesmen. Their real skill is getting you to invest money, not making money in the markets. They collect fees regardless of how well your portfolio performs. Be wary of fund managers who are more focused on raising capital than producing consistent returns. Timing the market is a fool's game. Luck plays a bigger role than you think. Even the best traders can't consistently time market tops or bottoms. Often, the trades that make them look smart are more about being in the right place at the right time. Don't waste energy trying to time the market perfectly. Focus on smart positioning and managing risk. Trading signals are a lazy approach for those unwilling to do the work. Yeah, you are lazy. If you're relying on someone else's signals, you are not learning to trade. You're just following. You'll never develop your own edge if you're constantly waiting for the next alert from somebody else. Stop chasing signals and start building your own strategy. True traders are independent thinkers. Signal services are designed to make you dependent. They never teach you how to think for yourself. So you'll always be paying for the next alert. The services thrive on your dependence, not your success. Focus on learning to trade without signals. Your goal should be independence, not reliance. High-frequency trading makes retail trading obsolete. HFT firms operate at speeds no retail trader can match. By the time you place a trade, they've already profited from micro movements that you can't even see. You're not playing the same game as high-frequency traders. Don't try to compete. Find your own edge. No one cares about your strategy if you cannot execute it under pressure. Most traders focus on building the perfect strategy, but ignore the fact that emotions and pressure often ruin their execution. The best strategy is worthless if you cannot follow it. Focus on mastering execution under stress. Discipline is more important than strategy. Following trends is for losers. Be the one who creates the trend. By the time a trend is obvious, it's too late to profit from it. Real money is made by those who understand how to position themselves before the crowd catches on. Don't follow the crowd. Learn to anticipate where the market is going before everyone else sees it. Your broker's education, if you could call it like that, is designed to keep you losing. Brokers don't want you to succeed. They make money when you trade more and lose more. Their education materials are there to keep you engaged and losing, not to make you a better trader. Be skeptical of any education offered by brokers. They profit from your activity, not your success. Scalping is a broker's dream because it maximizes their profits. Every tiny trade you make as a scalper increases your broker's profits through spreads and commissions. You're playing into their hands while they drain your accounts one trade at a time. Think twice before adopting scalping strategies. They often benefit the brokers more than traders. Indicators are for traders who don't understand price action. Poor guys. Indicators lag behind real-time price movements, meaning they often signal you to enter or exit after the move has already started. So real traders learn to read price action without relying on indicators. Develop the ability to read raw price action and market sentiment instead of relying on lagging indicators. Come on. Copy trading keeps you poor and dependent. If you rely on copying someone else's trades, you're not learning. You're not building any skill. Worse, the traders you copy may be earning commissions from your trades, regardless of whether you win or lose. You are a fool. Stop copying and start learning. Build your own trading skills if you ever want to succeed independently. The dream of quitting your 9 to 5 to trade full-time is a fantasy. Most full-time traders burn out from the stress and volatility. The reality is that the majority of people are better off trading part-time while maintaining a steady income. Don't rush into trading full-time. Focus on building consistent profitability while keeping your day job. Retail traders are not competing with other traders. They're competing with themselves. Most retail traders lose because of their emotional reactions, not because they cannot read charts or analyze markets. Their own minds are the biggest obstacle to success. Master your mindset before trying to master the market. Emotional discipline is the real key to success. Trading mentorship programs are mostly a waste of time. Most mentorship programs don't teach you to think critically or independently. They just keep you dependent on the mentor's guidance. Their goal is to keep you coming back for more. Real mentorship pushes you to become self-sufficient. If your mentor isn't doing that, you're being held back. You're not being helped. Charts are deceptive. The real action is in the order book. Charts only show you where the price has been, but the order book shows you where the big money is positioning. If you're not paying attention to order flow, you're missing one of the most important pieces of information. Don't rely solely on charts. Learn to read the order book and understand where the real money is moving. Leverage is designed to blow up your account. While leverage can amplify gains, it's mostly a tool that accelerates losses. Brokers love leverage because it increases the chances that you will lose your entire account faster. Be cautious with leverage. It's a double-edged sword that's more likely to cut you than to help you. Risk tolerance is a myth. It's all about mastering risk. The concept of risk tolerance implies that risk is something you endure, but successful traders actively manage and control risk. It's not about how much risk you can handle. It's about how much risk you can manage. Don't just tolerate risk. That's nonsense. Master it. Control your risk at every step to ensure long-term success. Paper trading is a waste of time. It doesn't prepare you for the real thing, not even a little bit. Paper trading lacks the emotional and psychological pressure of real money trading. Without the emotional stakes, you're not truly learning how to manage fear, greed, and stress and all of these things. You can use paper trading to learn mechanics, but don't expect it to prepare you for life trading. The real test is how you handle emotions with real money on the line. Scalping is a fool's game. You are trading market noise, not real moves. Scalping relies on trading tiny fluctuations, but those are often just market noise. You're constantly exposing yourself to risk without the potential for significant upside. Focus on larger, more meaningful moves in the market. Scalping exposes you to too much risk for too little reward. You don't need 10 screens. What you need is one good idea. The number of monitors you have doesn't improve your trading skills. Not at all. It's all about having a clear, well-executed idea and the discipline to stick to it. More screens often lead to more distractions. Simplify your setup and focus on executing well-thought-out trades. Less is more when it comes to trading. The 9-to-5 escape fantasy is a trading trap. Many traders are sold the dream of quitting their job to trade full-time, but most will burn out or lose money due to constant stress. It's often smarter to keep your job and trade part-time. Don't rush to quit your job for trading. Focus on building consistent profits while maintaining your income. Anything else is just stupid. And these 48 truths are just the start. If you're serious about becoming a better trader and want to dive deeper into my method that actually works, make sure to visit my website at alexduadari.com.